Hey, welcome everybody. It's another week of our updates, and we got a lot of very valuable information and guidance for you for this week. But first, let's introduce our host organization. Real Estate IQ is a full solution for your investment journey. We have our core product, our bestseller is the off-market distressed seller leads, right? You get a consistent, freshest data that are mined for you. So now you can do a consistent outreach and build a pipeline of deals for your wholesale and your flips, right? Basically, deal sourcing. We also got other, products that and solutions that support your journey as well. You can visit our website. All right, you can scan this QR code here to get a weekly update on what's going on the investment market and what are the best moves for your investment. We got a couple of testimonial success stories, lots of successful clients over the years, right? Folks that are getting consistent flow of leads, right? That's the foundation of your marketing operations. And when you do that, then you can really consistently make deals, right? Brian made 10,000, Daryl got $1 million under contract, Salvador 30,000 in profits. Jordan got 2 deals, right? One is 55,000, one is 5,000. And Ismail got consistent deals. He has been very successful using our system. And when you have a pipeline going, what you look at is the consistency in the deals, right? It's not about how much you make in one deal or another deal, but over a course of deals, right? Several deals, 10 deals, how much profit you got. Okay, we have a disclaimer, right? Everything we present here is for educational purposes only. We don't offer investment, financial, or legal advice. And always do your due diligence. And if you need help on, kind of advancing your deal, right? You got a situation you don't know how to deal with. We hope to address some of this in our case studies. But if you have a unique case, that's something that we can help you on as well. So just send the information to me, and I'll either personally help you or I'll connect you with a coach and mentor that can help you with your deals. Okay, so today's agenda, all right, we just finished our intro. We got a couple of case studies prepared for you, and then we'll invite our partner, Dr. John Huang, with his topic here. And then we'll also share with you what's upcoming as well. So first, we have our market update. We got 3 updates here. First is that in Texas, we're seeing softer sale. Redfin data is now showing 150,000 homes for sale, up about 2%. And we're actually kind of seeing that in the market. A lot of houses that are sitting on the market for over 100 days, 180 days, right? And they're not selling. They end up becoming expired or canceled, and then the seller still wants to sell, and they are much more willing to negotiate now. So for our listeners and our clients out there, right, this is the time for negotiating terms and negotiating discounts, right? Sellers are more willing to negotiate for a deeper discount or even terms that's gonna help you structure a passive cash flow type of deal. Another one, what we're seeing is that in Florida, right, as we know, in mortgage rate where we're looking at about 6%, right, low 6%. For 15 years, we're even looking at 5% interest rate, and now we are seeing momentum is starting to build on the demand side, and Florida is now shifting from more of a frozen market to a moving market. That said, we're still seeing a lot of foreclosures in Florida. Um, that's something to kind of look into. And actually, that's our third piece where Texas and Florida are leading our nation in foreclosure starts. The national foreclosure starts are now up year to year 26%. So there's a lot of foreclosures going. Florida has 3,523 foreclosure starts. Texas has 3,116 starts, and they're ranked amongst the top 2 states for new foreclosure filings. And Texas and Florida are continuing to show growth in pre-foreclosures and REO opportunities. REO means bank-owned, right? Real estate-owned opportunities. But deals should be underwritten on a more conservative basis because of the softer sales in Texas, and in Florida we're still normalizing in terms of buyer demand. So some deals update. We're so fortunate. I was just reflecting, we're around the end of February now, that because of the consistent leads, distressed seller leads, right? That it kind of enables us to do a consistent outreach. And every week we have deals that we can share, right? We got warm deals, we got warm leads, right? Warm leads are basically folks that they're responsive to our outreach. And then we are able to book a phone appointment or in-person appointment, right? Those are hot leads. And then when we're able to kind of go deeper into the underwriting, we call them fire leads. And we're able to kind of consistently, right, kind of build up this pipeline and also have a way to kind of showcase some of these cases for you. So today we have 2 condos in Fort Worth that we're featuring here, right? And we're kind of in the underwriting process. So we're gonna do some case study on these 2 condos on underwriting. So we have 2 of these condos. They are 1 bedroom, 1 bathroom each. No repairs are needed. They're actually currently leased out. And they've been on the market for over 6 months now. The owner has been dropping the price. Right now, they're asking $83,000 each. With condos, we gotta account for the HOA payments, right? HOA is about $275 a month. So when we start looking at the numbers, right, there are a couple of options. The first option is looking at a long-term rent standpoint. And for long-term rent, we can follow the 1% rule in our offer. So if the rent is $1,000 a month and the HOA cost is $275, that gives us a monthly cash flow of $725. And based on that 1% rule, which says that our purchase price, 1% of the purchase price should cover, the monthly cash flow. And so we multiply that by 100. So that would get us our maximum allowable offer to be $72,500. That's, pretty close to the asking price. That is certainly one option that we're going to present to the sellers. Okay, but if they don't want that, then we can go to option 2 if they are not willing to go lower than that. Our option 2 would be to do a sub-2 offer, which means we take over their existing mortgage payments as a way to finance the deal. And we just got the numbers from the seller about 20 minutes ago. And so we're going to kind of finish the underwriting. I think there's a number that will work, whether the exit, means a long-term rental or a wrap. We might be able to kind of structure a deal. But anyway, we'll offer these 2 options to the seller. Any questions you got? Feel free to share and comment on these deals and leads. If you have, like I said, you have some hot leads that you're working on and you need some help kind of looking at, how to structure the best offer. This is something that we offer to you as a service for free, and make sure you take advantage of that. Right? We like looking at these, and we like looking at these as case studies. All right, we have a couple of featured deals. Okay, first one we have this one in Waco. It's a sub 2 deal. The seller is willing to provide financing, so that's what's very interesting. This house this is also a condo. No major repairs are needed. I actually looked at it last week, or maybe 2 weeks ago now. It's walking and biking distance to Baylor University. The very interesting part is that the seller is willing to provide the financing, and so you can structure a wrap or a income cash flowing deal on here. If you want more information, fill out this QR, scan this QR code, and there will be a form for you to fill out to qualify as a buyer. And we'll start a conversation. The other one is in Elgin, right, 30 minutes from Austin. And the numbers also look very good. Again, the financing is already set up here. It's a sub 2 deal, so you can take advantage of that. I know some folks that are interested in buying sub 2. Now the interest rate has been coming down, so it's becoming more favorable now. But again, we're looking at a very, very good mortgage interest rate for you to take over. So again, scan that QR code, and we can provide more information for you. And then we have additional deals in Texas mainly, and also in other states. There are 10 deals in Ohio, 16 in Michigan. So depending on where you are, some of you are probably interested in looking at local, and some of you don't really care. You can find and flip deals nationwide. So lots of inventory here. So again, if you want to kind of learn more information about these opportunities, you just need to fill out the form to qualify as a buyer. So speaking of deals, right, kind of having the consistency of, number one, I think, is the understanding of how to do the deals, right? Different cases, different situations. How do you structure the deals, right? And then the second one is having a consistent pipeline to continue to speak to distressed sellers, and handling, kind of getting all the way to analyzing and presenting an offer, and putting you in the kind of the strike zone, right? To put them under contract. So this Deal Accelerator program, we have created and designed this to really help you accelerate your journey as a real estate investor, and really grow that. And we have put together, really good traction now. It's been over a year. 12 doors acquired, they're cash flowing. We have deals under contract, and also building to me, as a business person, in terms of operations, right? It's about building a consistent pipeline. And so, when we have a consistent pipeline, then we'll always have deals that comes after it, right? So we kind of the pipeline enables us to yield the deals. And so that consistency to me is crucial. So to learn more, scan that QR code and we can chat more. So now we have a really awesome segment here. I'm going to invite my partner, Dr. John Huang, to share the distressed asset report in the market. And I'm sure he has a lot of insight here for us prepared. And let me see here. How you doing, John?
I'm doing great, Steve.
Hey, welcome. Good to see you as always. And I'm going to yield the stage over to you.
Sounds good. I'm not, I'm not sure if everybody hears your signal was kind of a little bit wacky, or it's just me. If my signal is not good, forgive me. Just give me a hint. All right, I'll try to fix it. All right, let's get started. I'm excited to share what this market is about, what we find out for you that as of today. Okay. So let's talk about investment. Real estate investment is a part of it. Okay. I always get started with the investment triangle, try to educate everybody with the basic concepts, but it's not a basic, it's a fundamental. Okay. Let me just make a correction. This is a fundamental. On and off in investment, you can go really fancy, you can AI and all that, but the fundamentals can go wrong, cannot go wrong. Okay, coming on the days, the Winter Olympics, right? U.S. hockey team finally after the miraculous win in the 1986 and then won again, right? After 40 years, that's amazing. That's amazing. But it always is the fundamentals that get you the gold medal, right? All the fancy stuff when the stake is high, pressures is high, is gone, right? It's all the fundamentals that really win the battle. Um, so the fundamental of the investment triangle is that you have liquidity or cash flow, and then you got a safety. Safety basically is to make sure your principles is recovered, protected, and then there is a return, ROI, right? Return on investment, return on advisory, return on something. So it's always between these three that really matters to any individual. Okay, and where is real estate? Well, real estate goes here. Real estate is when you don't have to worry about cash flow, right? You have a great income and you have a good liquidity, meaning you have an emergency fund at any time available to you and your loved ones, and you have extra money, right, sitting there doing nothing, and you would like to protect the value against the inflations and against any kind of unexpected events. But in the meantime, you want to get some moderate returns. Long-term rental, right? A lot of people say, oh, I wanted to go into the long-term rentals. Well, long-term rentals is going to get you a inflation, barely beating inflation rate of a return, about 4%, right? If you get into a short-term rental, mid-term rental, probably you can get 10%, 20%. So you got to have the mind set on what kind of a return you want. If you're looking for 40, 50, that kind of a return, well, you got to go some riskies, right? There is no safety returns that could give you that kind of a return, double-digit returns. So this is where you got to give up safety, right? Let's say you wanted the high return, and that's all you want, and good, that's good. Then you can give up some of the safeties, right? And that's where people swing over to stocks, mutual funds, Bitcoin, crypto coins, and some other kind of instruments like margins and options, right? And those are the investment vehicles that can get you a double-digit recruit, but in a short term. Volatility is always the problem. Because of the volatility, so you give up your safety, but now what you gain is liquidity, okay, cash flow, right? We always ask individuals to keep 5 to 10% of their investment money as a emergency fund for investment, right? In case of some of the good stocks you want to buy, good house you want to buy, right? 5 to 10% of your total investment, cash availability. But if you are, for instance, you're really not looking for return. You are close to retirement, and you wanted to protect your principles and all the money, but meantime you want to have enough cash flow to pay for medical bills, for the rentals, and for the real estate tax and all that stuff. Then you probably want to resort to this edge of the triangle, whereby bonds, okay, bonds are more reasonable investment vehicles. Some people also consider annuity, right? Annuity, for which you put money in and it generates a lifetime income for you, and the principles usually is protected. Or if there is leftovers, your successors or beneficiaries will get them, right? That is when people are getting retirement age or concerned about the health issues and that sort of thing. Return is no longer the high priority because a bond return usually is about 2% to 4%, is really low, right? So again, if you factor in, say you have a really good cash flow and you have a really good income and you are generating a lot of income, right? So now you're worried about the tax. Okay, so then there are other factors that you got to consider. There are tax-free investment. They're deferred, right? Tax-free, and there's a deferred, okay, and there is a tax now, okay. Ideally, you want to plan your family assets from a tax-free to deferred tax to now tax now, okay. If you put all the money in the bank, you are making a big mistake. Or put everything into stock market or trading accounts. That's a huge mistake you're making because the tax is going to eat up 30% of all the revenues you generate, right? 20 to 30%. So yeah, if it's a long term, it's a 15%. You don't have to correct me. I know that, right? I have all the license, and I worked for investment banking and the private equity firms before, right, as an executive. And my team manages all the money. We're talking about trillions of dollars. But anyway, so what I'm suggesting you to consider is also from a tax planning perspective. Risk is one thing, return is one thing, liquidity is one thing, but tax planning is another big chunk of a thing that you need to consider. So some of the investment vehicles, for instance, if you do generate a great business income, SEP RA is something you got to get it done before tax return day, April the 15th. SEP RA can let you to contribute to 25% of your total revenue and profit of the last year of 2025 into a self-made pension plan, right? Self-made retirement plan, okay? And there are some really good plans that is available that can even give you a 50% bonus up in the front, which means if you put in $100,000, it will give you $50,000 right off the back, right? And it give you guarantee compound interest rate of certain amount, right? All these are available. And SEP RA, and you can consider solo 401k. Or if you really want something like a pension plan you build for yourself, you can actually do your defined benefit plan, DB plan, okay? And that is something that you should consider. And another thing, so tax is another parameter. And the last thing is estate transfer, okay? Estate transfer, you don't want to leave all the money on the table, right? So for instance, in our real estate investment, we talk about probates. Probate is when someone doesn't have a trust and their family assets is just widely exposed. And then the court will essentially temporarily hold onto your assets, no matter how much is that. Freeze your bank account and your assets before the lawsuits are dismissed, right? And usually it takes about 2 to 3 years to free up the assets. So estate transfer is a big thing now as we speak since 2024. Okay, big time. So all these parameters are critical, paramount for you to consider before you jump into any investment. Okay, if you have a good cash flow, that's great, awesome for you. But if you have a lot of assets and are exposed to the tax, you probably want to talk to financial advisors, not CPA, unless you want to pay $500 per hour for a CPA consulting. Very limited CPAs would do that work. But if you go to branches like for CFP, CFAs, they want to sell their stocks and mutual funds, right? That's all they want. So you probably want independent financial advisors, pick their brains. They usually have representation of all the major providers and the products and services, can find you the most customized solutions, right? That's what I suggest you do. Okay, so now I also wanted you to keep eye on something. Yesterday one of my clients told me that, hey John, that the plan that you help us to set up was really good. We get 6%, 7%, even 8 to 9% consistently in the last 10 years. What is that? interesting enough, that's called the investment grade insurance plan. Okay, IGIP. Okay, or IGIC contract. It's a permanent life insurance that gives you the tax advantage because it's tax free completely, and it's also great estate transfer. And the return usually is a 7% to double digit 15%, and I've seen 20% before, right? And also it's very safe. It's against the market up and downs, and the liquidity. You can borrow the money as a real estate investors. I have many of my partners pick up a permanent life insurance and put it there, cash in there, right, to hedge against the emergencies. And also at the time when they need it for property investment, they just borrowed it out. As a matter of fact, I got 2 clients borrowing money from their insurance accounts, and then use it against cash buys, right? But anyway, okay, let's get to the meat of today's talk, which is the market scan and updates. So if you have any question regarding the reinvestment triangle, give me a holler. Give Steve a holler. Right now, even the webinar, we cannot give you financial advisors and advisories and anything, but privately we could, because we own all the license, just so you know. Okay, we don't advertise it, but we provide that service out of complimentary and no charge, right? Because our primary business is real estate and everything. All right, okay. So this is our infographics as of this week. Just so you probably realize that every week we create newsletter, we create a presentation that you can use to present your partners, and we create, starting from this week, the infographics, right? And this little by little, we're going to add podcast and all that. But we only have limited resources. All of our associates, engineers are busy, so just Steven and I, we're the we're the personality here, okay? But we promise you're going to have solid content in there. So if you need this piece, this infographics, just as a advertisement, piece, you can send it to your clients or your partners or somebody. Let us know, okay? And Steve showed you the barcode, and later I will show you the barcode as well. So the market is pretty normalized as we speak, okay? The real estate market, it is getting into a really, really strong buyer's market, really, really strong. What I mean is, if you got a cash, if you got your capacities and analytical skills, and you leverage the consulting and the coaching capabilities, you're looking at making a pretty good money this year, right? What do I mean buyer's market? Buyer's market means the houses are waiting for you to buy, okay? And you can always negotiate down if you want, right? So in Texas, statewide, the market indicator, the mortgage is pivoting towards like a 5-point-some% now, okay? 30-year fixed interest rate is already at 6.01%. It dropped from last week, okay? And the inventory level is almost the 7 months or 6 months. Actually, that's just a book information. That's just academic information, because when you and I know, a lot of the houses have been in the market for over a year, 2 years, right? And I've got a lot of people at the church ask me, hey, John, where can I find a house? Whether I should buy? I give them my honest opinion, right? I said, if you're not in a rush, hold off till mid of this year or later this year. But if you are in a rush, it's a good time to buy, right? Go for the 2 strategies that Steve just mentioned about, and we call it a MAP process, which is the step 2, right? Take over the mortgage, right? Especially the mortgage, the houses are refinanced in 2021, 2022. They have a huge benefit, 2 to 3% the mortgage. You're not going to see that in the next 20 years, probably. Okay, that's our forecast. In the long run, the 30-year fixed mortgage is going to stay around 4.8 to 5%. That's not our opinion, but it's an integrated opinion. 15 years of fixed interest mortgage probably will be around between 3.5 to 4.5 years, right? depending on the credit scores and all that. So you're not going to see 2 to 3% anymore, right? So take over the mortgage is a great strategy, and or owner's finance is an awesome strategy. We are actually having tons of deals in that fashion now, right? We just sold a property, a prominent property with the 2 acres in South Lake, right? On a owner's finance. It's a phenomenal deal for the buyer and for the seller. Okay, 2 acre in South Lake, we're talking about 1.5 to $2.2 million property, right? But with the owner's finance, the individual just pay about $5,000 every month, and that's it. Right? It's similar to the rentals, but now they own the properties, they can do whatever with it, and so on and so forth. But anyway, so this is a buyer's market, all right? So you have the bargaining power, not the sellers. National average is actually still low, which is interesting. But in Texas, we're overloaded with inventory. That gives you and me, the wholesalers and the real estate investors, a lot of bargaining power. Okay, we are Texas is literally the #1 foreclosure state. Number one, a lot of foreclosures up running, and we're talking about right now in some of the counties, the foreclosure pre-registration is already up to April. So if you're in that market, let us know, right? But anyway, I can't go through all the details, but anyhow, Austin is a disastrous area. Austin is in big trouble. Okay, if you have a property over there in renting or in you want to sell, you probably got to watch out. It's pretty bad situation. Okay, #1 buyer's market is actually San Antonio, right? We have a lot of leads, readily available leads, and the deals available for San Antonio. And let us know if you're interested. And even Austin is a disastrous area, especially for people who wants to rent the house out or sell the house. But for wholesaler, this is the area you definitely want to look into. Houston and DFW area are fairly stable. Okay. Okay. All right. Let's keep going. All right. So this is the stock market from last week. We predicted. You remember last Thursday we're talking about the Friday. The market is going to go up. You see that? Yeah. Friday is going to go up, and then it's going to drop on Monday or Tuesday this week, and then it's going to tip up too. That's our forecast. If you remember, and by the way, this is the picture we snapshot from last week. We just want to keep it for your reference. Let's take a look at this week's performance, right? Look at that. Look at that, right? The market is stable. I mean, it tipped it up, right? Friday tipped it up last Friday, and then it went down, and did it tip up again? Yes, it did. 26th is Thursday, right? Is today, and Wednesday is the 25th, and Tuesday, right? Can you see that, right? Let's talk a little bit about what's going on here. The market, you probably heard some of the scandals going on with the data breachings and pirating on some of the AI tools, right? And also that was the disclosure was yesterday. People were pretty upset because it did beat the expectation, but not anticipation. Okay. Everybody anticipated it to go up more, right? However, unfortunately, it didn't. However, if you look up some of the AMD is actually pushing for a good deal this week. Give us a lot of hope. And the State of the Union speech from President Trump give a lot of people confidence, right? And that's why you are seeing this dark orange line is pushing up so high. Can you see that? The dark orange line is very, very important. It's called the zebra edge. Okay, it's an indicator of consumers' confidence, right? If that line is on the positive side, long term, mid term, the market will go up. Okay, because investment is all about the emotion, right? If people think positively, the market will go up, right? just like in holidays. Okay, let's look at what's the rest of this week, right? This morning, interesting enough, the jobless claim came out. Instead of it going up so much, 215,000, it actually 213,000. So it actually beat the forecast. So it's another good news this morning, right? Let's look at the Friday. Well, this Friday, the information is interesting, okay? Because it's going to have the price, the producer's price. You know what that is? That's a manufacturing price, okay? Manufacturing price that could be from importation and from all kinds of parameters. And there's also a producer's price index from the core, right? That could be consumer goods, manufacturing goods, and all that. So basically, if you look at the number, the index number is forecast to be low or flat. That's not going to happen. Okay. As we know, the tariffs and also the the economic war that is going on between America and the Europe, right? Even Canada is going to push up the price. So it may upset quite a few people. So this Friday, we anticipate the market actually go down a little bit. Right? Yeah, it doesn't help you in anywhere in buying or selling stocks or mutual funds, but you need to just be aware, right? Friday, if a Friday goes down, usually the coming Monday and Monday and Tuesday is going to tip up a little bit. Okay, and it depends on the next week's economic events. Then it will decide whether next week is going to stay up or stay down. So tomorrow, safely say, these numbers is not going to be this pretty. It might go up, right? Producing price is higher, and then year over year is higher, right? So next week is a relatively flat week, not much of excitement. Has a manufacturing PMI, Purchasing Manager Index. That would tell us that if manufacturers are spending more money buying goods or not, right? And auto sales as well is going to give us an indication, right? Employment is on Wednesday, right? Is on Wednesday, and then the jobless claim on Thursday again, and the productivity is going to be is announced, and then the employment report on Friday. Oh, by the way, before I forget. This week that we had some dramatic drop on the Monday, Tuesday, is that we had the GDP report. The GDP wasn't very pretty. The GDP, instead of 4.4% quarterly, it actually reduced to 1 point something percent. That created a lot of the GDP, panic, right? Because that's the indication of how strong the U.S. economy goes, and that creates a lot of a panic on the the U.S. dollar. So as you can see now, for instance, the commodities. Last week we talked about that the commodities are going green, right? This is the last week. And then this week is actually changed a little bit. The gasolines is going negative, and then the heating oil is going negative because of the cold front that is going on right now, right? And also the propane is going negative, so the price changes, right? And all these, when I say the cold front is gone, right? It is gone. So if you look at the other the German gas and then the European area, the commodities, this week they actually swung to the negative side, a dramatic swan, right? From 3% to 3.9% positive to minus 2.7%. That's dramatic. Even the UK gas is it actually flattened out from a 6%, 6.8% to 0.8%. That's a huge change, right? So those are the gasoline, oil, gas industry. Um, did I talk about the uranium last week? Yes, I did. Look at that; it's pretty flat. Okay, uranium. Okay, all right. Let's talk about the precious metal, noble metals, gold, silver, all that. Last week it went up, went up, went up. Right. Weekly it went up. Monthly it was a mixed message, and gold has already recovered the lost ground. Right. But if you look at this week, this is going up more and more. And actually, all precious metals and then manufacturing metals, industrial metals, are going up positive this week. Can you see that? Everything is positive. Um, it has a lot of, as we said, why people, other than industrial utilization, right, like NVIDIA's, AMD's, Intel, they use gold and silver for chips, right, memory cards, all that. Um, the people buy individuals. We're talking about 7 billion people. Um, quite a few of them, especially Indians, they buy a lot of gold and silver and they hedge against currencies. And a lot of the government are buying the noble metal, especially gold, to hedge against the weakening of U.S. dollars. So it drives up the changes. And yeah, so this is something that we need to watch out for. So the U.S. dollar is weakening against euros, against the Japanese yen, okay, and against the Chinese yen and English pound, right? Is a weakening, and that's why you're gonna see that in the next slide. I'm gonna show you the bonds, and then the Treasury bills are actually going up. It's tipping up, okay. So when the U.S. dollars is weakening, the buying power is weakening, the bonds is gonna go up. When bonds go up, okay, hold on a second. Is bond go up, the yield go up, is good for you or not? Not really. Not really. Because your 401k is going to drop like a crazy. Okay. Just remember when the bond yields go up, when US dollar weakens, right? When gold goes up and the US bond and the treasury bills yield go up, your 401k, your IRA is going to drop. Okay. Just remember. But overall, though, because of the inflation rate is reducing, in a second, I'm going to show you. Okay, it's on this page. The tips. Look at these 3 tips. Okay, the tips are reducing year over year, month and over month, day after day, week and after week. What does that mean? That means the inflation is controlled. The inflation is well controlled. All right. And what does well control mean? Well, reducing the rate is going to happen. Okay. When the inflation rate is reduced, then the Federal Reserve rate is going to reduce. Okay. And it's not a yield we're talking about, a treasury bills yield. Okay. We're talking about the Federal Reserve target. Okay. The yield, the interest rate is going to reduce. When that is reducing, stock market is going to go higher, right? And the U.S. bond is going to lower potentially, and a lot of positive things is going to happen. When inflation is well under control, that's tips that go down. All right. So this is something you got to watch out for. So what does that mean? So in the long run, the interest is going to go down. The yield is going to go down. This line is going to go down. Maybe by the end of this year, we're going to have another interest reduced by the Federal Reserve. Okay, if that happens, everything is going to go crazy. Okay, mortgage is going to go down and all that stuff, right? All right, so Bitcoin actually tip it up because of the weakening of what? US dollar. Yeah, you got it. You got it. So the 30-year mortgage rate is continuously reducing. As of yesterday, it reduces over to 6.01%. All right, and the 15 mortgage rate is about 5.35 now. Okay, which is really good, right? Um, but I want to show you something I never talked about before. The MBA. Have you ever heard about the MBA? Some of you probably know I have been an MBA professor at the UT Dallas for 17 years, right? I was a professor since 2004. And that's not an MBA I'm talking about. It's not a degree. It's mortgage-backed assets. Okay, when you borrow the loan from a bank, they sell the loan to somebody else. Actually, the loan is becoming a debt asset. Okay, it's a it's a collateral. It's a very precious asset to hold on to, right? So what essentially happens is the MBA mortgage market index, is actually increasing. What does that mean? That means a lot of mortgage is being borrowed right now and being traded. Okay, being traded. Is that a good thing? Yeah, it's a good thing. It's good for economy and it's good for the real estate market and it's good for the bankers, right? And it's good for the consumers too. All right. All right, let's look at the building permits. Okay, surprise, surprise, surprise. Not a good news. Actually, we talked about the building permits was too much last week already, right? But according to just most recent data, okay, actually the end of December, the December and January, um, what happened? Okay, we're good. We're good. See, we're good, right? All right. I thought my line was busy, but anyway, so January and the December. Okay, I saw it. Thumb up. Thank you, buddy. The January and the December, more building permits were applied for. Is that good news? Not really. Not really. Okay, we're talking about the nationwide. I mean, entire America, right? Um, and most of the building permits are applied is in Texas and some of these booming regions or metros, right? And if you look at this line, it's already doubling the 2016, and it's already almost doubling the 2017. Um, Even though it's halfway to the peak of 2022, um, too many permits were applied for. Not a good news. Okay, not good news for constructors, but good for consumers and good for the traders and the investors. Okay, and what about the building permits of residentials? Oh, look at this! Look at this! Huge amount! Huge amount! 4% more building permits applied for residentials. So the constructors and the builders are hedging on it, right? And once they get the permits, what they're gonna do? They have to build, right? They have to build. So we're having a huge influx of new buildings, new houses. Okay. So when people are saying, "Oh, there is a $7 million," I mean $7 million, 7 million deficit of residents in America, may be true, but not in Texas, though. Not in Texas. So the house started, tons of houses started, as you can see. Okay, tons of houses started, and it's $1 million, 1 million more started since January. It's a lot of a house. Okay, and the demand is low because these houses are expensive. So the buyers, the consumers cannot even occupy them. So that's the problem. That's a real problem to our economy. All right, let's speed up. So the mortgage or initiation didn't change much. The U.S. new home sales is keep going up, keep going up. Remember, the new home sales, they give you low interest rate, and then they give you the waive the deposit. So a lot of incentivization. That's why the new home sales is doing extremely well. So when the new home sales is doing well, guess what's going to happen to the pre-owned houses? Well, it's not going to be good, right? Pre-owned, it's not good. Therefore, it's a buyer's market. And existing home sales, as we said, is already very low, very low. The data is updated. It's low. Okay, it's low. It will continue to be low. Okay, the price is continuously dropping. Okay, if you get our newsletter, scan the barcode and request the newsletters, and the detailed report is available for you. It looks like this. It looks something like this. Let me show you. So this is the Word document version of it, very detailed of all the data that you need to determine which metro area for your investment, and read our intelligence report for the wholesalers, advisors, give you the highlights, lowlights, and what to do. And we have a PowerPoint version of it as well. This is a brand new. It has all the highlights and the lowlights and the strategies and what you need to consider. It's really good. I mean, I'm saying that all the companies, including our competitors, we are the best, right? We have the knowledge, experience, and we also have the skill set of generating that. Because Steven and I and all of our coaches, we have been in the market for a long time. Together is more than 100 years, right? But anyway, so the price to rent ratio I already explained last time, so I'm not going to waste time. So basically, the ratio stays high, so it's cheaper to rent than buy a house at this point. Okay, but for new house, it's a different story. Okay, if you are the wholesaler and investor, this is the best time because the cash buy house and everything, the sellers will be willing to work with you. Okay. And that's why Steven and I, we have a lot of cases and a lot of deals going on. So join in the deals. For a lot of people, we have the best data in the market, right? And then we mine our own data. And you use our data to contact the sellers, distress the sellers and properties, you will get a higher chance to land a deal, land a note, right? But now we actually give you another incentivization, which is we already worked on a lot of these leads. We already lend the notes, right? All you have to do is to join the deal with us. Why you want to do that? To give up your profit? Well, we want to grow our coaching capacities, and we want to grow our communities. The bigger the community is, the better the real estate deals we can pull off. It's all about circulation. It's about economy, right? And okay, so the consumer confidence is just keep going up a little bit, right? The layoffs didn't change much. The firing and the layoff didn't change much. Primarily is in the California area, all right? New York a little bit, but Texas is rare. Okay, so something else before the April the 15th the deadline. I want to keep reminding you that as a business owner or real estate investors, you could, because you have a business, you can actually get SEP RAs and then solo 401ks for yourself. There are a lot of really good deals that is on the market now. It will end probably around March the 30th. Okay, you have 1 month to work on it. If you're not too sure which one to pick, let us know. We love to help you. Some of these deals, as I said last week, only started off with that $10,000 to build a pension-like retirement plan instead of a up and down, mutual fund stock investment if you don't have time to do it. One of these is they give you 50% bonus up in the front, and then they give you a 200% interest bonus as well. So when the market yields 3%, you get a 6%, right? And this you can turn into a lifetime income until you pass away, right? And that 50%, think about a 50% of return that you can get on any investment. That takes a long time. It takes about 3 to 5 years. If you're really, really smart, for average people, it takes about 10 years to get 50%. Okay. Don't look at the stock market, the overnight rich dream, all that stuff. Don't believe that. Okay. The online social media personality, they always boast about it. Overnight, I made it this much of money. I mean, again, it's not sustainable, right? I've done that myself. and a lot of my friends did that in their life, but it's not sustainable. So we want a steady, a consistent, and hopefully, we don't. I mean, not hopefully, the principles are all protected on this page, right? All these deals, and beat the market for sure because they give you the interest bonus. Another company, it started with the N. That company give you 30% of bonus up in the front, right? For your pension plans, for your annuity plans, and for your retirement plans, IRA, SEP IRA, Roth plan. If you have some existing plan, you're tired of playing stocks and mutual funds and look at the market every day, roll them over. You get the bonus right away, right? And they guarantee you 9.5% compound interest for the next 15 years. Oh my God. How do you beat the market like that? 9.5%? You can't, right? And I've got another company actually give you a simple interest of 10% guaranteed for 10 years. That's still really, really good, right? Yeah, so all these options are available, and I highly encourage you to actually look at them instead of just putting all the eggs in one basket. As we said, scan a barcode. You can always get a hold of us, and we have our data deals subscription, the leads subscription. Um, by the way, our leads subscription without all these benefits and promotions and discounts, we're lowest in the market. Okay, we're lowest. Um, and now we give you 70% off possibility for the Valentine's Day's promotion. It will end in a couple of days, right? A couple of days, literally. So scan a barcode and talk to us, and our account managers will talk to you with the details. And with that said, that's all I have for today. And it's going to be interesting week for all of us. Happy investing and happy deals. Okay. All right, Steve. That's all I have for everyone.
Hey, thank you, John. We
Of
really
course.
appreciate you sharing the updates and everything, and especially the promotion up here. You should definitely take advantage
Yeah,
of this. We only have, 2 days, 48 hours left on here.
that's right. That's right.
So let me end with some upcoming events here. All right, we just had the hidden gems, how to find discounted houses last night. There are a couple of additional classes tonight. We got pre-foreclosure gold mine. Friday, there are, it's about how the different ways you can make money with real estate and also building wealth. And then Saturday, we're gonna talk about the foreclosure secrets, right? How can you find deals at the foreclosure auction? And then tomorrow, of course, we have the office hours and open house as well in the morning. You should definitely check out the Friday open house. We talk about how you can join this movement to disrupt the real estate market and how you can also win in the process. Now, with that said, that's all we have for you, and we got 1 minute to give back to everybody. We'll see you next week, and if you are interested in our events tomorrow, we'll see you tomorrow. Thanks, everybody. Thank you, John. Good to see you.
Yeah. Make sure you invite friends to come to next week. And the referrals will give you a referral fee too. Bye, everyone. Have a good day. God bless you.